Good morning, good morning. How you guys doing? Happy Friday, March 8th, 2024. Nice to have you guys with me on this morning. I thought we would do a wrap-up of some of the main markets that we were looking at during the week. And if we have some time at the end of the session, then I will take some of your requests, your chart requests. I know I got a couple on Telegram. You guys were looking, or at least one of you were interested in looking at nat gas, and as well as, I believe, bonds. Yeah, TLT. So we can look at that as well. But first, let's start by hitting the like button. I think we only got 4 likes right now on our YouTube channel. So let's start by hitting the like button, okay? The more you guys support this channel, the more you guys support our work, the more I feel inclined to offer to you and do for you guys. And plus, we're getting the word out to other traders as to how the market actually moves, the supply and demand from the big institutions, and things to be on watch for going forward. All right, so as you can see, I have the Bitcoin chart up. So we can start off with Bitcoin. There's been a lot of moves in Bitcoin. And we were talking about this massive area of supply that we have in play right now on the monthly chart. And if I show you that, you can see there is a massive supply that was created back in 2021. And there she is. So this supply was pretty significant, okay? Because it was the highest point that price had ever reached up here before the significant move to the downside. And so we always have to be careful with supply areas. When price is inside supply, you always have to assume that there's going to be some supply being filled and that price is going to decline, all right? We don't know 100% if it's going to happen or not. That's why it's best to just sit on the sidelines and wait to see what the reaction is. And so you can see price has gone up, but if you zoom in, you can see that it has not yet removed the area of supply, okay? You can see that right here. It has not removed it, so it's still within supply. And you can see the stalling action here. This is what this is here. This is all a stalling action from this supply. So whether or not it's just going to coast sideways and then head higher, or coast sideways and drop, we don't know. So that's why it's best to sit on the sidelines when it comes to trading this at this time. Okay, so that's what I'm seeing with respect to Bitcoin. We'll let it do its thing. It's too high to be buying at this point. If it retraces, then we'd be looking to potentially buy when price starts to climb back up. Okay? But for the time being, we just leave it alone. It ripped through this area of supply, which was great. Right up here. There was a nice supply area that price has now since ripped right through, so that's good. That's a good sign. And another thing that I was looking at, if you guys remember, was the ETF, the largest ETF that represents Bitcoin. It ripped through its monthly area of supply here as if it wasn't even there. It just acted like nothing is even there. And the pressure to the upside is leading me to suspect that Bitcoin is likely going to follow suit, okay? Because this one's at all-time highs. Bitcoin, not yet. So I think there's a very good chance that it just might follow suit. Okay, let's look at the Euro-US dollar. Lots of stuff going on with the Euro-US dollar. Lots of stuff. So the first thing I want to bring your attention to is my 4-hour chart. This is where I like to plot all the percentages of retail trading. So you can see up throughout this area, retail traders were super aggressive with short positions. They were at 84%, then they increased them to 88%. And then the banks rallied price up. So do you remember the last time we did our session with the Euro US dollar? And we were looking at all the different time frames, and I was telling you what the bias was on each of the time frame. Remember, on the 4-hour chart, our bias was to the upside. Why was that? Because I told you there was an institutional buying zone here, right? So then what took place? We had the euro rate release, and they decided to hold the rate. But I told you, they're likely going to hold the rate. It's the reaction that's going to be of interest to us. But we had this time frame with a green frame around it saying that the bias price was going to move to the upside short term. And so that is exactly what took place, as you can see. Price came down into the buying area here and shot up like a rocket. So let's now reassess the situation. Okay, let's reassess the situation because this is what we have. So let's start off by taking a look at the monthly chart. And nothing has changed there. Monthly chart represents the bias over the long term. So the bias over the long term, according to the monthly chart, is bearish. Okay, plain and simple. The weekly chart suggests medium-term upside. Why is that? Because we have institutional demand that came into play. Right? Now, when we look at the daily chart, what is our bias? Our bias is now bearish. Okay? This is short-term downside pressure. And why is that? Because we came into an area of supply. So you see this reaction that's been taking place over the last several hours? Big bullish pressure to the upside off of institutional demand on the 4-hour chart. And now supply coming into play on the daily chart, which is now putting in bearish pressure on the Euro US dollar. So with this supply in play, the pressure will be to the downside. Until what? Until some sort of demand comes into play. So bearish pressure, short term, until some demand comes into play. And when we look at the 4-hour chart, what do we see here? Move to the downside, and then will demand come into play at some point? Yes, we see a demand zone there, for sure. But has that demand zone already been used? Well, if you take a look, you can see, yes, indeed, it has been used. So when a zone has already been used, the likelihood of it being used again for a similar purpose is quite diminished, okay? Meaning, if price were to get down here, the likelihood that it's going to be used to drive price back up to that point is unlikely. Could it happen? Sure, it could happen. But is it likely? It's unlikely, okay? And that is if this area of supply here that we're contacting on the daily chart is going to be used to facilitate a move down here. Okay, this is daily supply. Let me just write it here. Daily supply. So this daily area supply has been contacted, which is going to put a bearish pressure on price. Now the question is, how much pressure is actually going to come off of this area? Because the thing is, when you look at the daily chart, we don't have a downtrend. Okay. Do you see a descending trend line there anywhere? No, we don't. Okay. We just have a daily supply located in the middle of the chart. Was this daily area of supply used previously? Yes, it was. It was used to facilitate a move down. This is where I took a trade short on the $1 million short trade on the Euro US dollar. It's one of the areas that I added to my position right there. So we're back into that supply. The only thing is, the last time it was tested was just a very quick little test of it, which is good for this supply to hold again. It usually is a very good sign. Now, do we know for a fact that there's going to be downside pressure off this daily area supply? We don't know that for a fact, okay? Because the dynamics are such that make it a little bit more complicated to know things for certain, okay? There's lack of trends, double-tested weekly zones, so these things bring in a different dynamic. So what we do know is what to watch for the short signal, okay? And I'll be sharing that with members of the school. But the downside pressure is what we're going to be watching for here on the daily chart, okay? I don't know how much is going to play out today. We could get a very nice drop in price today, but I don't know if it's going to happen today or if it's going to happen next week. But this is what we are watching for with respect to the euro. Okay, now we can switch over to gold. Very nice drive up in price. Beautiful, yeah. We've been looking at the monthly chart for quite some time, and what we've been wanting to see is a close above all these peaks. And so the latest peak we got was this one over here. And is price going to close up there? Who knows? We're still early into March. Things can reverse very quickly and head lower. If the short-term bias on euro is to the downside, and it could potentially lead to medium-term pressure to the downside, which could eventually lead to long-term pressure to the downside. Gold has a lot of catching up to do. You know, let me just place this here on top of gold. The orange line is the euro, okay? And October 2023 is the lows of gold, right? October 2023. Let's go back to euro. October 2023 is the low of the euro, okay? It's the low of gold. It's the low of the euro. All right. So let me show you something here. So they both hit lows down here, okay? But you can tell very clearly that the path that gold has taken has been a lot more aggressive and a lot stronger than the euro. Now, usually they work in very tight correlation with each other. Gold moves up, euro moves up. Gold moves down, euro moves down. But this one is, gold has actually thrust itself a lot further than the euro. So my thought is that if the euro starts getting short-term bearish pressure, which leads to medium-term bearish pressure, which leads to long-term bearish pressure, the drop that we have on gold is quite significant, okay? It's quite significant. Now, it may not drop, but I think the likelihood of a drop, if the euro was to kick into a different gear and start showing us that it wants to drop and it starts removing demand zones and that short term turns to medium, turns to long, I think there's a good chance of that. Okay, we have on the weekly chart, we have this trend line that we've been tracking. And this is important, this trend line. It's not the highest of qualities, but it exists. And if we take a look at the distance that price has moved previously from the trend line to its highest point, you can see we've already established somewhat of that highest point in gold, at least from what I'm seeing. Could we go a little bit higher? Yeah, I think that's possible. But would buying gold at this point be a good decision? Probably not. Okay. I would say there's about 80 to 85% chance that we're going to see a retracement in the next week or two. So buying gold up here wouldn't be a good idea. Okay. And I think the drop could happen very, very quickly, considering where the euro's at and how far separated gold has made itself. So I'd like to see at this point what retail traders are at with their positions. 75%. So they just reduced them slightly from the 79% that I checked yesterday. 75%. So let's adjust that. 75%. Okay. 75% sure at this point. So those are my thoughts with respect to that. Let's go to the US dollar Japanese yen. And we got a drop, a nice, hard, fast drop. It looks like the banks are focusing on reducing their long positions, which is fine. They were super aggressive. We had plotted them out here. And, previous drops saw long positions prior to the drops at 140,000. 161,000, 158,000. So up here we were at 183,000. So they're just taking profits on long positions. Okay. So that's pretty good. Good for them. But remember what I was saying with the euro with respect to the time frames and the biases. Okay. If we were to look at the biases on here, I would say monthly chart supply is in play. Bias is to the downside, but very weak because price has already contacted this area and went into this area very deeply. All right. So the strength of the supply is getting weaker and weaker. Same thing with the weekly chart. Bias is bearish, but this area has been tested several times before. And which area am I speaking about? I'm speaking about this area here. Okay. The area has been contacted several times before. But when you look at the data being so overly aggressive with long positions, it's either they're going to continue adding to those longs or they're going to do what they typically do when they reach a high amount of positions, which is take profits. And it seems that is the case right now. With respect to the daily chart, no supply or demand has come into play. Price is just reacting based on what's happening on the higher time frames and based on the positions. Okay. But this is the overall bias right now by looking at the monthly and the weekly chart. So we'll wait by looking at the monthly and the weekly chart. So we'll wait for momentum to kick back into gear to the upside, and then we'll look for signals to take part. Okay, but I am interested in going in long this chart. Just got to be patient. We also were looking at Mara earlier this week. It contacted this area of supply. Remember, they came out with earnings, and earnings were positive, but price dropped regardless. Why? Because supply was in play. And there was a good chance that it was going to use this area of demand to propel price up, but they have decided to remove that area, which is now leaving the chart open for a move downwards. And then when it does move down, ladies and gentlemen, look what it's going to be coming into contact with. An area of demand. Right. But Was this area of demand already tested? Yes, it was. So what does that mean? That the likelihood of price using the same area of demand to facilitate a move that already took place is lowered. It's lowered, okay? So if I was to look at this chart and determine what the biases are, daily is definitely bearish. Weekly is definitely bearish, not because of any type of significant supply coming into play, although there could be supply right now based on the formation of this wick. But I would say bearish, okay? So overall bias, short-term bearish, medium-term bearish, okay? SMCI, let's go through this one. Remember what I was telling you about this area of supply being used as support, okay? Price dropped into it, and it's using it as support. And now price rallied up, closed at 11.59, and then this morning it's gapping up to 11.86. All right, so you see how that worked? So daily chart, bullish. That means short-term bias, bullish. Can't really tell you what's happening with the monthly. Obviously, monthly is bullish because it's been moving up. But, you know, after 3 significant momentum candles to the upside, it's difficult to continue saying that this is bullish because this is way, way overextended. I wouldn't be focusing on these time frames. I'd be focusing on daily time frame and its proportions. All right, TGT was our earnings play winner. Got into this one, had signals down below, and I alerted it on Twitter back here at $144. I said to you guys, this one's an alert for me. This one's a long signal, and I've already given that out to members. And earnings came out, and price gapped up. Now, how would I know that? Your typical traders like trying to trade earnings, you know, hoping that earnings is going to be good or bad, depending on what they're trying to do, short or go long. I was just studying price action and following the storyline. And what I saw was evidence that the big players were buying this stock. And if the big players are buying this stock leading up to earnings, what do you think is likely going to take place? You know, what I found in my studies is that coincidentally, every time the big money is buying a stock, earnings just happens to help to facilitate the move of that stock. It just is like that, okay? You know, so you look at Tesla. Tesla stock was being offloaded by CEOs or executives, including Mr. Musk over here. They were offloading shares majorly. And where do you think they were offloading those shares? Right here. So price comes up into that area, and now we're seeing downside pressure. We shouldn't be surprised. I was mentioning that this was likely going to happen. So, but there's like headlines all over the place. Oh, Tesla's really slacking in terms of price action. Well, yeah, because the big CEOs and executives are selling their shares. So be careful with that one. The other one I wanted to mention was JetBlue. This one's being bought up by a certain major investor. I can't remember who it was that I read. If you guys remember, you can type it up in the comments on YouTube. But some big investors buying up JetBlue. And when I looked at the supply and demand on the charts, I could see why they were, okay? Because this is a very good spot to be buying the stock. And as you can see, ever since it was alerted that they're buying the stock, it's been moving up. Look at the lows. Bad earnings in November, and that's the very lows of price. What would you need for people to, if you were a big investor and you know you're looking to invest in this company, and it's not just you that's looking to invest, but a lot of other old money is trying to get in here too. What would you need at the very lows of price? You need people to be willing to offload their shares that they've been holding on for a very long time. And you get price to drop down to $3.50. Earnings comes out very poor. And then people offload the shares to those that are willing to buy. And then the next earnings, oh, miraculously, it's positive. And then price continues upwards. I think this is a good one. I have targets at about $10, and I think we'll be heading there in due time. All right, that's it. That's your wrap up. I hope you appreciated it on this Friday, March 8th. Please hit the like button. I'd love to see our likes head towards the 50 likes range. And if we do that, I'll bring you something really special for next week, okay? So let's get the likes up to about 50. Your love and support is always appreciated. Really do appreciate all the support that you guys have been giving to me over the last couple of weeks. We're going to continue to do these live shows. As long as you like them and support it, we'll continue to provide them to you. All right, ladies and gents, I think, oh, wait a minute. I think one of you wanted to look at Nat Gas. We can do that really quickly. We can do that. I almost forgot about Nat Gas. Nat Gas, I've been watching this one for some time. And our target at $1.99 just got hit, as you can see. And now we're seeing a retracement. Why does it retrace every time my targets are hit? Because my targets are strategically located in areas where I believe the big money is going to take profits. So that's why they retrace, because when there's profit taking place, price tends to drop. So that's what we're seeing right now, is price dropping. And if you look at the 4-hour chart, you can see it's dropping inside of an institutional area of demand. Okay? So if we're going to do the biases, this is how I would do it. Short-term bias to the upside. Okay? Short-term bias to the upside. We did have short-term bias to the downside because our target was reached. Medium-term bias to the downside because supply was contacted. Long-term bias, based on the monthly chart, is bullish. Okay? So